Eyo Value Investors, how are you doing? My name is Stijn and welcome to my YouTube channel. I've recently published a video where I did a comparison between Gratomic and Nouveau Monde. And a lot of people thought that I didn't put enough research into Gratomic or that I didn't state the importance of certain parts of their business plan well enough. So today we're doing an extremely deep dive into Gratomic and I'll try to stay as unbiased as I possibly can. First, we'll be going through all the facts that we know about this company, their business plan and their extension plans in the future. Second, we'll discuss the management team. And lastly, I'll give you guys my own price predictions and buy targets for this company. Let's go. So Gratomic is a graphite mining company that has been around since 2014 and they have the claims to two properties. First, the Buckingham property in Quebec, Canada. The company has stated interest in developing this property, but as far as I can tell, not much concrete has been announced just yet. We do know, however, that recent drilling results show a great starting grade of graphite, especially compared to competitors in the space. And second, their bread and butter, the Alchem property in Namibia, which is on the continent of Africa. It is good to know that the Alchem property is a vein of graphite, which is completely different compared to Nouveau Monde or Talga Group, which have flake graphite. For example, vein graphite is more pure and needs less purifying. And as from March 29, 2021, commissioning for a graphite mine and processing plant has started on the Alchem property. And that is awesome. It is expected that the property will be completely up and running anywhere from July to October this year, according to the CEO. It is important to note that as an investor, no PEA or preliminary economic assessment has been done thus far on the Alchem processing plant. See, normally a junior mining company goes through the following stages. First, a desktop or conceptual study, then a PEA or the preliminary economic assessment is made. And this is where a mining company presents the first snapshot of the project, scope, size and the potential economics to investors. And then after the PEA, a pre-feasibility study, shortly followed by a feasibility study, are normally done. Okay, so Gratomic is currently conducting their PEA, but they're also commissioning the plant alongside that. So obviously Gratomic chose to commission their plant before a PEA was completed. And traditionally that is seen as risky. And in the last news report they even state that historically such projects have a much higher risk of economic and technical failure. There is no guarantee that production will begin as anticipated or at all, or that anticipated production cost will be achieved. And of course this is just political correct language. And I've taken this quote from the risk factors section, and yet they are legally obliged to say this. Just keep in mind that when you invest in this company specifically, that they've chosen to start commissioning before the traditional studies have been completed. But then why would Gratomic still commence the commissioning of their plant even when they do not have the scientific data to de-risk their investment? Well, the CEO has stated that there's an existing stockpile of about 23,000 tons of vein graphite on site, and that by just walking around the property you can actually see graphite in the ground for about 15 kilometers along the vein. So because it is so visible, the management is really confident in their resource and they have decided that their time and money is better spent on building the actual plant and then just complete the PEA alongside the commissioning of the plant. And this might turn out as a great decision, especially since they're about 2 years ahead compared to competitors entering the space, like Nouveau Monde or Talga Group. On the other side, they have taken on more risk. Time will tell which is the better decision. And from that graphite, so the stockpile they found on the ground, they can see that their graphite is high purity, high crystallinity, and they've concluded that their vein graphite is extremely easy purifiable. And besides this, their vein graphite does not need to be chemically washed like flake graphite does. Therefore it is more environmentally friendly and could even perform better than flake graphite in batteries. And although this company has gone through the more classical hoops, they have published a technical report which you can read on their website. But keep in mind this was all the way back from 2016. But the indicated resource is of course the same still. Arno Brandt, the CEO, has stated during this interview around the 4-minute 45 mark that the company can increase production up to any point it desires, meaning the company can expand upwards to 100,000 tons of vein graphite per year if it wants to. Of course, we'll be using this number later on during the price prediction part of this video. It is also good to know that the company will probably only produce around 10 to 20,000 tons of graphite this year. And aside from those 100,000 tons of faint graphite, Gratomic has recently engaged with Forge Nano to build a pilot facility for battery anode materials. In Namibia, specifically the Luderidge Bay, Gratomic owns a facility where they will start out producing about 1,000 tons of battery-grade anode material. And from 2022 onwards, this plant is expected to produce around 2,000 tons per year. And in the long run, 20,000 tons per annum of battery anode material is the goal for this plant. So for the future price prediction part of this video, we'll be using the 100,000 tons of faint graphite and the 20,000 tons of battery anode material. And in the long future, this company of course has the option to also develop their Canadian graphite property. But again, not much concrete just yet. So infrastructure wise, Ockham is located just 2 to 3 hours from a large harbor in Luderidge. And by the way, the roads are properly paved and a large part can even be traveled by highway. Also, Gratomic stated on the 8th of April that they are planning to power the Ockham processing facility through solar power from as early as 2022. And this is of course great news, since the whole point of graphite is to be used in lithium-ion batteries, for example in electric vehicles. And in turn, the whole point of electric vehicles is their carbon neutrality. So Gratomic stating that they intend to power their facility fully through environmental friendly means is of course great news. It is also good to know that the company is debt free as of February 2021 and they have a cash position of about $8 million currently, which they think is sufficient to fully commission the Ockham property. So it seems that this company has for now omitted some of the more classical ways of researching and determining the feasibility of a mine. Though they certainly have done their homework and the pieces do seem to align quite nicely. Also, the rumor on the street is that the PEA will be published just a couple of weeks from now, and I think a lot of investors will see that if and when that report comes out, the company will be effectively de-risked quite a bit. One grudge I do have for Gratomic, however, is that researching and informing yourself of their business is quite hard. I think a lot of progress can be made with their investors presentation and their website. And I really hope that once the PEA comes around, they will organize their information more easily and understandable for us investors. As far as the management goes, I would totally advise reading up on them yourselves. You should decide if these are the people you trust with your hard-earned money. Do they seem honest? Do their goals align with yours? That's all for you to decide. For anyone willing to dig through this specifically, aside from all the material Gratomic publishes themselves, I would advise reading up on the CEO.ca Gratomic page. Also, there's a Gratomic Facebook page where a lot of information is shared as well, so check out that if it interests you. People from that page actually helped me research this video. Something empirical about the management, however. Lately, a couple of insiders have been buying a lot of shares. No option exercising or warrants or whatever, just insiders have actually been putting their own cash into this company, and quite a bit of it. And that can be of course for many reasons, but it leads me to believe that they have a lot of confidence in their company. Okay, cool, but what about the buy target? So from what we have heard from the CEO, we know that Gratomic is planning to do about 100,000 tons of faint graphite and 20,000 tons of battery anode material. Prices for these materials are kind of all over the place. Faint graphite sells for about $2,500 to $3,000 per ton and could go all the way up to $5,000 per ton and far beyond. So for conservatism's sake, we'll be using the lower number here. And as far as I know, battery anode material go for about $7,000 to $10,000 per ton or even more. So I'll be using the middle end of this spectrum, so about $10,000 per ton. So I predict that for 2026, the faint graphite revenue will result in 100,000 tons times $2,500 per ton, so in $250 million in revenue. And the anode material will result in 20,000 tons times $10,000 per ton, so in $200 million in revenue in 2026. So if you combine those two, we get to a future revenue of about $450 million in 2026. So now we slap on a price to sales ratio of 5 and you would get to a future market cap of about $2.2 billion. Cool, so we divide that by the current shares outstanding and we get to a future share price of about $14 $7.52-ish. And we can calculate that backwards at 15%, which is my minimum return on investment, and we would get to a fair share price to pay today of about $7.22. And of course, in practice, the company is trading way below that value. And that is because there are a lot of uncertainties still. Once the company proves that they can deliver what they promise, the share price could trade a lot closer to this number. And subsequently, since the company does not have a PEA yet, and since the whole investment is kind of risky, I personally want a really large margin of safety on my investment. This is what ensures you will still get great returns even when things do not work out as expected. For Gratomic, I want my margin of safety of about 75%. I normally take a margin of safety of about 50% or just slightly less, so this is extremely conservative. So $7.22 divided by 4 gets us to my own buy target of about $1.80 per share. And if in the future Gratomic does publish the PEA and this PEA de-risks the whole mining operation, then you could of course omit part of the 75% margin of safety. And you could go for a 66% or 50% margin of safety. So according to my opinions and calculations, and if Gratomic manages to actually produce what we've calculated here, well, then the stock could 15x in just 5 years. All the way to $14.50 per share. And if you trust the management and if you like what Gratomic promises, then below $1.80 per share seems like a good entry point. And just imagine how good the current opportunity of $1 per share and below actually is. Keep in mind, I myself am invested in Gratomic with about 5% of my money tied up in this company. So my opinion should be taken with a grain of salt. Also, I'm certainly no financial advisor. I really hope you guys enjoyed this video. And if you did, please give it a like and maybe even subscribe. Comment down below what you want to talk about next, and I'll see you guys in the next one. Peace.